Okay, so how do we trade IPOs and super growth stocks? Well, all my co-authors, we all have different trading styles. So we basically created rules based on our styles, just like every one of you has your own style. So maybe one of these rules will adapt, will be one that you like and fits your style, or maybe help you tweak an existing rule you already have. But these were the rules we created because we wanted to see which ones would give us the best results. Was there a rule that we were able to really capitalize on that phase's run? So like, the institutional advanced phase, like what is the best rule to capitalize the most gains in that phase? That's really what we were setting out to do. And so we developed these rules and we, again, like I said, applied them to specific phases. So let's just quickly look at Tesla. So this is the same line chart I showed you earlier. Again, this is the late bloomer pattern. I've identified the IDDP, which was what we like to call the due diligence phase for short, and the turbulence zone. Okay, so again, this IPO advanced phase is short-lived. I like to say around 90 days plus or minus, depending on the stock. 90 days is probably about like on the max end though, in my opinion, based on what I've observed. So we have two short-term rules that we created, Ascender Rule and Everest. And I'm going to explain those in a little bit more detail in a second. And then we also looked at some rules to really capitalize on this institutional advanced phase, the midterm rule, and also a 40-week rule, which for those of you that know me, I like that rule. And also the Everest rule could be applied in this situation, which I'll talk about in a second. So if you had played the Ascender Rule on Tesla, just quickly graphically, you can see you would have gotten out, actually looks like out at the top. However, this rule is like a 3-part rule where you sell on the way up, and I'll show that in just a second. The midterm rule looks at the 10-week line, so it takes gains when you undercut the lows of 2 closes below the 10-week line. The Everest rule takes into consideration parabolic movements so that you can capitalize, and it's more like an offensive sell rule, so it won't get you out right at the top. And then the 40-week rule simply is when it cuts the 40-week line and you take your gains. So that one actually in our research has shown you achieve the most gains. However, you also have a lot of drawdown. And if that's not something you withstand, that may not be the rule for you. Okay, so this is just quick, high level. We do not have enough time, unfortunately, to go into this in detail, but I'll plug Richard Moglen's podcast or YouTube channel, because as you all know, he's got great material out there. And we actually did go over this in detail. So you can watch that episode where we talked about this. I think it was the New Year's Eve special, December 31st. So you can look that up.
Yeah, and it was interesting because we were talking about what will those high flyers from 2020 do? And now we've seen the result of a lot of them did roll over through their 40 weeks. So it'll be interesting to see, maybe we get a chance to look at some charts later today. I'll look at the updated versions of those charts. It'll be cool.
Yeah, and actually I did update that, Richard.
Oh, perfect.
Not for all of them in this presentation because we didn't have time. But yeah, a lot of them are still holding in the one rule, Ascender rule, and that's it. And if they hit their 40-week, they're out. And the only one still holding is CrowdStrike. So
interesting.
Yeah, so everyone can go back and look at that if you want more information. But so anyway, so on the short-term side, we've got the Everest rule. This one is a little bit subjective in that, what is parabolic movement, and what is your time frame? Because, things can look parabolic on the weekly and on the daily, and you can apply it differently. So you can use it offensively, but you can also use it in the long term. And the way I like to think of it in the long term is maybe if you already have like a 50 to 100% gain, and this is a big stock, maybe you wait until like that climax top action that could potentially happen, and maybe you employ then this parabolic sell rule where then you're just looking back 2 days back. So that's just a quick high level on that one. The Ascender rule I mentioned is a good one for capitalizing on the way up because you sell half when it breaks to 21 exponential moving average. You sell a quarter if it breaks to 50, and then you hold the rest for 18 months or 500%, or if it just undercuts the whole thing. So that's what I was mentioning to Richard. Some of the high flyers that we looked at, Fastly, CrowdStrike, Zoom, Fiverr, they're all still holding this last piece. Now, granted, you're not having the big gains if you had maybe used the midterm rule, but you're still participating in the move. And if it reinvents itself, you know the story really well, you still got a piece that you're holding on to. The midterm rule has some different pieces to it. The main piece is, I would say, the closing below the 10-week line. So you're not really holding through a deep base that's below the 10-week line, but still above the 40-week line. But what's also really nice about the midterm rule is that no matter what, it's going to take your gains if you're 30% off the peak. So that's what I'm saying. It's not going to, you're not going to have those drawdowns, say, if you had the 40-week line where you would be holding on even 30% off the peak, but it's still holding the 40-week. So yeah, so that's just my quick summary on that. Again, we'll plug Richard's YouTube where we chatted about it, and you can look in more detail. So we'll look at Zoom. This is, and we'll show all the results so Richard and I originally looked at the first piece of this, and now we'll just see how it played out where we're at. So again, this is a late bloomer. Here's that prior run up. Here's the due diligence phase. Now in this case, you know, we had a short due diligence phase, I just want to point out. So I mean, this one less than a year. And then there's that institutional advance phase. Okay, so it's easier to look at where the rules took out here on the daily chart. So I'm just going to show you right here. So here was that buy. So that's that weekly. I'll just go back here. This is that buy right here at this base that Market Smith has identified. Okay, so that's this point right here. Now the average rule. So this is where I'm saying, you know, it's a parabolic movement. And so it doesn't work really well when you think about, well, here I'm just coming out right out of the base. You know, maybe if you were able to hold with this, then you would be able to then identify, you know, what is parabolic for you. You know, when you're buying right out of a base, it's always good to really just use that 7 to 8% stop loss. Just want to highlight that too. So it didn't do well in this scenario, but then that's why we've got different rules that you can employ. So here's the ascender rule. Here's that first break, this purple, which I know is probably going to be hard to see, is that 21 EMA. And so that was where you're first taking half off. And then here where it breaks the 50-day, you're taking the other half. And then, as I mentioned just briefly earlier, the rest is still in play because it hasn't been 18 months yet. It hasn't hit 500% gain yet, and it hasn't undercut the whole structure. So the last piece is still in play, and I'll show you what the numbers come out to in the next slide. The midterm rule took you out here, which was the 30% off the top. And then the 40-week, clear, here's the black lines, this 40-week line, 1% right here. And, you know, I've disclosed earlier when Richard and I talked about this, Zoom was a big winner that I had, and this is where I sold it because the 40-week line is the rule that I use. Okay, so here are the results. So the 40-week line took me out and March 5th, 2021, 214% gain. And this is just if you made the single buy at that buy point. This does not incorporate any ads or anything like that. The midterm rule, 276%. So in this case, that rule was actually the better rule in this situation. And then the ascender rule, you'll see, so that first piece that was taken off, that half was only at 14%. But then the second piece was 115. And then the third that's still open is 218%. And that's as of earlier this week. So if you look at the total gain, you've got using the ascender rule where you still have that little piece in play, you're at 90%, which still is great and probably, you know, depending on your style, better for you mentally because you already took some of those gains on the way up. And then I mentioned in this case, the average rule did not work too well, but again, because of the way that it works on that parabolic motion. Okay, so there we go. So key takeaways that just want to highlight about the rules is that, you know, you would still be holding a core position in with the ascender rule. And when Richard and I talked about these again, I keep referring back to that video. We were still in on the 40 wick and the ascender rule, and now we're still in on just the ascender rule. So it's just interesting, how things have changed here. The ascender rule takes some profits on the way up, participating in the big move. You could, and then the midterm, I think one of the benefits of that is protecting you from that weekly close 30% off the top. And if we were to go back and look at those other big leaders, that was the one that took most of them out as well. And then, as I mentioned, the average rule works best for parabolic moves, really in that IPO advanced phase or at the end of a run in a climax top situation.